Hello there, this is James and you're watching Tixee Live. And a very good afternoon to all of you, and all of you a very happy Wednesday. In today's program, I want to have a quick chat about obviously the EU CPI, which was announced today, a new record high, plus the ADP report, and whether or not this is giving us a hint that maybe at long last, the US labor market is beginning to slow down. But before we get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. With that out the way, let's get started. So yes, Eurozone inflation hits a new record high today, a new record high. Remember, I was saying this morning, I was saying yesterday, that 5 massive banks, Deutsche Bank, Danske Bank, Societe Generale, etc., they predicted between 9% to 10%. Well, it wasn't as scary as 10%, but it was still slightly higher than anticipated. It was actually announced at 9.1%. Okay, versus 9% expected. And that is the 9th consecutive record high for the CPI in the region. And if you have a quick look at it, starting from November, it's 4.9, December 5%, January 5.1, Feb 5.9, March 7.4, April 7.4, May 8.1, July 8.9, and today 9.1. So that's 9 consecutive months of record highs, 9 consecutive months of inflation rising. If you break it down, what made up this number? Okay, energy obviously was an increase of 38% per year on year. Food and alcohol and tobacco was up by 10.6% annually. Clothing and household appliances up by 5% per year, and services up by 3.8% year on year. So yeah, now they join the frightening club of high inflation, with UK at 10.1, US at 8.5, Germany at 8.8, but they are now catching up very slowly to the UK. They're not quite ready yet to join the 10% club. Goldman Sachs now expects the ECB to hike by 75 basic points on the 8th of September. In fact, a lot of people are anticipating that. Hello, good afternoon. I don't only speak English, I'm afraid, but I hope you're well, sir. I hope you're well. So Goldman Sachs now expects the ECB to hike by 75 basic points on the 8th of September. Okay. Along with Bank of America, they also believe the same, that they would do 75 basic points. In fact, we had a couple of ECB members over the Jackson Hole Symposium. They mentioned 75. So it's not just the Fed who could raise 75 basic points. ECB is now expected to do the same. And to be honest, aren't that record inflation at 9.1? They have to do something, because in my view, they're incredibly behind the curve. They're very slow to react. Bank of England was the very first, but they did little increments of increases. Fed then got involved, and at least the Fed's been aggressive. Reserve Bank of Australia, they've been aggressive. And the ECB have been very tepid, very slow to react. So now they have to go a lot more aggressive into it. So yeah, 75 basic points on the 8th of September is very much now on the cards. Now, something else was announced today, which is usually like a medium type of event. It's not a sort of event that, it's overshadowed by a certain event happening on Friday, put it that way. But this is the first time we've had a little bit of job data, which is not as robust or positive as the other job data we've had over the last couple of months. We actually had the ADP report came in, and that's the automated data processing report. Okay, and they're actually the largest private payroll company, and they basically they do the number of private jobs, new hires. Okay, it's a private company. It's different from the NFP, which is more government controlled. This is a private company. Anyway, they have announced the new jobs created at 132,000 versus the expected number of 288,000. So a lot less a lot less than anticipated. In fact, they haven't released their job data for the last couple of months as they wanted to change the system of how they register new jobs. So they've released the last couple of months at the same time. So not just the most recent, but the last couple today as well. And again, you can see there's maybe a slight decline in new jobs created. There was 308,000 in June and 270,000 in July. And today is 132,000. So this is the very first time in a long time, we are seeing a slight hint of a slowdown or cooling in the US labor market. In fact, ADF's chief economist, Neil Richardson, he said, our data suggests a recent shift towards more conservative pace of hiring, possibly as companies try to decipher the economy conflicting signals. Okay, so again, they're talking about how businesses are getting concerned with future outcomes like potential recession on the horizon. He also went on to say, we could be at the inflection point from a supercharged job gains to something more normal. Now, of course, this all leads up against, and this is not as big as the non-farm payroll. Okay, still it's something to be taken into account, but this is the very first time in a long time that we are seeing maybe figures cooling in the labor market. Now, some traders, okay, I'm not one of them, to be open. They see the ADP report as like an early warning report for what the NFP number could be. In my personal opinion, only, in my experience, I've always seen a big difference between the two. You can't set it in stone. For the ADP is lower, that the NFP is definitely going to be lower too. Or the ADP is higher, that means the NFP is going to be higher. There's never really been that direct correlation all the time. Sometimes maybe, but not all the time. So it's not concrete. But really, clearly, this is building up to the big main event on Friday. And we need to really ask ourselves this question. Okay, is the NFP going to show us something similar like the ADP? Like I said, I don't see the correlation between the two. I never have, or not so much, not so regularly. But like I say, we really need to question: is the NFP is supposed to be? Is that going to start proving as well that the U.S. labor market is slowing down? And at the end of the day, that's what the Fed wants. They want to bring inflation down. They want the labor market to bring it down. Market will probably then think if we do get a bad NFP, we might see a bit of a rally because the Fed's going to be gentle. No, they forget the Fed wants a softer labor market. So it's not going to change their mind one bit or another. So anyway, that's for Friday. And we'll talk a bit more about that in a bit. On other news, Snap breaks. And this could be, again, a sign of the times. Signs of the times, okay, of what could be coming with the labor market. They've announced that they're going to cut 20% of their workforce starting from today. And that's around 1,300 jobs cuts. And they're obviously putting this down to obviously very poor performance in ad revenue. I've said this before. I've done videos months ago on Snap and other social media companies where they are saying they are having a slowdown in ad revenue in the current climate. And they have gone on to say that their quarter revenue is like 8%, which is way below their goals. And this, in fact, 2022 has been the worst year since they became an IPO. The worst year since they became an IPO. So is this the sign of the times? Are we going to see the likes of other social media companies doing the same? And those job cuts, like 20% of the workforce, 1,300 jobs starting from today, is pretty brutal, as is the signs of things to come. Let's have a quick look at the market, how it actually currently stands. So anyway, this is the euro. Currently just holding its own above parity. It was beyond parity this morning when we were talking, when we were looking at it. It's since then dropped below parity. It's since managed to recover, maybe a teeny bit on the boost of that ADP report. Disappointing. I don't think it would last very long though. Currently trading at 1.0018. So yeah, that's a key level. Again, it was that key level of 1.0027 was holding it for a while, but now it's broken just above it. Be interesting to see if that level is going to hold it now as well, keep it up. So like I say, again, obviously inflation is extremely high. Obviously the Euro bulls are thinking 75 basic points. Disappointing ADP report could mean we get the NFP as disappointing as well. Again, I don't see the correlation between the two, but anyway, we've seen a little bit of strength there from from the euro. The euro, not the strength, the euro holding its own slightly. Again, I think is only a matter of time. The currency, though, which had really been suffering today, almost broke down to the 1.115 handle, is the sterling. Under extreme pressure, currently trading at 1.1611. In fact, the low of today has been around about 1.1600. So just nearly touching that 1.15 handle. Okay, so the sterling's under a lot of pressure. A, yes, we've got dollar strength. B, there's so much issues with the UK. And like I said, don't forget, remember the 5th of September, we have that election result of who's going to be the new Prime Minister of the UK. And as we get closer to that, I will obviously talk a bit more about that. Oil was under a lot of pressure today as well. Obviously, there's signs now that the US and Iran are getting close to getting that nuclear deal over the line. If that's the case, Iran would then be allowed to open up its oil exports, which means there'll be a million barrels a day of oil on the market. Per day, extra. 1 million barrels per day extra on the market. This is why oil is under pressure. It's just trading around 90 at the moment. As well as that, you've got recession fears are beginning to creep in again, and that is hurting oil as well. Gold, again, I say it was trading around similar levels we were talking about. Remember, I was saying the key level for me at the time, which I was keeping an eye on, was $1,710. Well, it came around and touched it, and it has bounced off that for now. It's currently trading at $1,117. The main area of interest for ever to become a bit more bullish again will be to break $1,727 about $27 an ounce. Sorry, what I'm talking about. So currently trading at $1,718 an ounce. S&P 500 still under pressure, currently trading at 3,987 points. Like I say, he's managed to dip slightly above the 4,000 point level at some point, but still remains under a huge pressure. From Friday onwards, as we close the month out, if it stays like this, it would have lost around about 5% since Friday. So yeah, it's looking like it's going to end another session on a low as well, So yeah, that's not having the best of time. So again, like I say, we still have that real much of an impact on the market, which is related to obviously what Jay Powell said on Friday. So that's how it stands at the moment. Other big events to come up, still to come, of course. We have obviously our EU CPI, which we had already. I thought that was deleted. My mistake. German retail sales, US ISM manufacturing, and obviously the big one this week, which is US NFP and US unemployment claims, because I think this is going to be the big event, the job data. I will be doing a watch along for the NFP starting 10 minutes beforehand. So I'll be going on air at 12:20 p.m. UTC. Please come along and join me for that. Like I say, I think this is going to be a potentially a big market mover. As usual, don't forget, I go on 10 minutes beforehand, so we'll discuss a little bit more about it, and we look at potential scenarios of what could happen on this announcement. So please come and join me for that. So 12:20 p.m. on Friday, of course, UTC. The market, as it currently stands, the FTSE slightly lower, negative 0.42%, DAX currently trading negative 0.11%, and Eurostock 50 currently trading slightly higher, 0.14%. So yeah, that's how the market stands at the moment. A shocking, but a pretty expected high inflation number or inflation reading from the EU. ADP, okay, like I say, is not a huge, it's not often the big event. It's overshadowed by its big brother, the US Non-Farm Payroll. But still, it's the first time we've seen some evidence or some potential evidence of a slowdown in the US labor market. So that is of interest. And Snap, is this the signs of more things to come for more tech companies? I mean, like I say, if I have a look at the NASDAQ in particular, okay, slightly higher on the day, but still trading at 12,413 points. It's still pressured there as well. Don't forget, you can ask me questions anytime you wish, or simply say hi if you like, or share an opinion. What do you think? Do you think? How long will it go till the sterling against the dollar will fall and break 1.11600? Don't forget, there was who was it? It was Citibank, I think it was. Was it Citibank? They're predicting, no, actually, no, it wasn't. It was Rabobank, actually, sorry. They're predicting the sterling at some point to go as low as 1.114. And we are trading around levels, not seen for a very long time. So there's a lot of pressure. I do think with the sterling, when it comes to sterling, I think a lot more attention is going to come on to whether or not Liz Truss wins the leadership battle next week, because there's a lot of nerves about what she plans to do. So there's a lot of nerves about that. So that's going to be key. So do bear that in mind. And plus, don't forget, we have a very strong dollar. We still have a very strong dollar, and it's likely to get more stronger as well, especially with the Fed being more aggressive. If there is no questions, don't forget, if you think of a question later, okay, not a problem, put it in the comment section on either Facebook or YouTube. I will see them, and I will reply to them next time I go live on air, which of course will be tomorrow at 8 a.m. UTC. In fact, I'm online 3 times tomorrow, because number one, I'll be on 8 a.m. UTC to cover the European Open. Then at 12:30 p.m. UTC is be my next episode of my new series, #Ask James. This is a series where a topic is chosen by you good people, and we dedicate a live video just to cover that one single topic. It could be education, it could be anything. Now, that one topic chosen this week, which we'll be doing tomorrow, is by Jay Davis, and their topic of choice was candlesticks. So we'll be dedicating a whole video just to teach, or just to talk about candlesticks, to give you a good understanding of what candlesticks are and how to read them. So please come and join me for that. And after that, obviously, again, I'll be back on again around 2 p.m. UTC to cover the US Open as well. So the US Market Open. Obviously, I know we have the US Open in tennis happening now as well. I'm not going to be talking about that. I'm going to be talking about the US Market Open, obviously. But anyway, if there is no questions, not to worry. Don't forget, if you're watching me on Facebook and you enjoyed this little video, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little video, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this video and found it useful and interesting, give me one of those. It's nice to know that you like what I do, and I really appreciate that. I really do. Same as I really appreciate all you guys coming to watch the video and join me. I really appreciate that too. Anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.